Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, and this is the 5th of May, 2020, and the time right now about 4:40 p.m. Central Time. Another strong day in the stock market. And what we know is behind it is each day we're waking up and we're hearing more cities, more states, everybody's reopening and people are going out. We're seeing how people are eating in restaurants, not next to each other, but they're out there. In Chicago, we're still in a shut-in, but I had to go out today. I had a flat tire, so I had to go get it fixed. And to make a long story short, I saw more traffic. I went in and unfortunately, the people working in this place were not wearing masks, but us, the people coming into them, were. And that's one of the things, you've got to do. In fact, one person looked at me as he came in and didn't have it. He said, I should get my mask, and I shook my head. Good idea. That's how it works. You got to pay attention. You don't want this to spread. But we're seeing this around the world. We're now starting to hear the good and the bad. In the financial sector, Hertz, I haven't seen it yet, but I know that they're talking of declaring bankruptcy. We saw J. Crew yesterday. There's going to be a host of major retailers. I don't know what Macy's will do. Lord & Taylor. There's so many that are in trouble, and we'll see what they do. But are they going away? That's the thing. They're not. What happens is you dilute the stock. Savior comes in, the debt gets written off, the name brand keeps going, and that's how this works in those industries. Don't know about airlines so much, but Hertz, car company, with nobody traveling, they got a problem, and they got to solve it. And I don't know how you do something like that, but I'm not the chairman of the company. Energy, big move back. Why? Well, we're getting to the point where we know what's going on is going to be less production. You don't need those numbers right now. Every week that you see the Baker Hughes report, the rig counts, you're seeing them drop, and they're not dropping a little. Big time drops. So we're going to have less production here. We know OPEC has claimed they're going to do their part of it, and they're cutting right now. So we'll see. But you're no longer talking negative numbers. You're no longer talking under $10. You've got Brent at 31 almost, and you're back up to 27 in the WTI. WTI gets up to 35.40. Believe me, the producers that will be left, they can sell, they can produce, they got to make some decisions. Let's go to our first chart. On the S&P, it's 415. That's why those boards were clearing up. You can see how this market's come from 2438, let's call it, just round it, to a high close of 2870. Today's close was over it. Well, not the close, but intraday you were over it, but you couldn't hold it at the very end. It's been a nice rally, and each week this resistance point is going to keep coming down at the market. That's the 18-week average of closes. And it's falling about 20 points a week, so it's got a ways to go if it wants to move up from here. When we come over to the chart here, this is a 50% correction on the S&P, 62%, 38%. Market got up to just over that 62%, has fallen back to the 50 percentile area. Okay, so we're in a zone, and the word is a zone, where we've had the euphoria, things are not as bad people think as they are. I don't know that. I'm watching the bright guys, the Sam Zells, the Warren Buffetts, the big boys. They're saying something very different. They're saying they don't know what the new norm is. And while everybody else is rushing in, and I'm hearing JP Morgan opened a record amount of accounts and the millennials are getting in, that bothers me. It's either this is a replay of 2009 and 8 when the market finally bottomed and just took off and it was relentless to the upside, or we've had a bounce in a market that wants to come back down. I'm not committed. I want to make that ultra clear. Not committed. When I look at the chart action, it's still bullish. You have a pattern of higher lows and higher highs. However, right here is a new problem. If you take out 2771, what happens without taking out 2965 prior to that is you will have lower highs, lower lows. A break in that particular pattern. The market will, unlike here where it stalled a little bit and made this play and then came back, be a very different pattern. that could be a bearish pattern. So a number there. Why do I care about it and go, uh-oh? Because this time around, you're right at the 18-day average. You weren't back here. When you're at it, remember the 18-day average is the line in the sand. Over it, I interpret that as having all my indicators should be looking for bullish bias. Under it, I'm looking for bearish bias. If you got to 2770.5, you would have lower highs, lower lows with downside bias. Admittedly, the risk in the trade from there would be over if that was the high, 100 points. I mean, it's nice to talk what ifs. It's very hard to trade them unless you're trading these the micro, mini contracts, which are the 1/10 size. But that is something I'm looking at. So what do I think? I think the bulls will defend as best as they can the 28-24 level. That could even be where new buying comes in to see what happens. My problem with it, and there is a problem, if you take out today's low, 28-24.5, you will end up with lower highs. I cannot tell you that that'll mean you get the lower low. I'm watching. This is the first time that I'm seeing something like that. I'm also seeing that the upside, I think, is getting capped very quickly. I look at this as major resistance, the upper Bollinger Band along with the 200 and 100-day average of closes. If you fall under 2771, I want to be the first to say as somebody that if something new started, you got a real dilemma. It's only 60 points before you're into big support at the lower Bollinger Band. But could that be a change? I don't know. We're watching. The reason I mention it is momentum is pointing down, not up. Momentum often leads the market. And I know you're going to say, Ira, the market's up. It doesn't mean anything. Innately, it's pointing down. You can see that. That's problematic if the market starts falling in price, because then that'll get, if you will, justified for what it's doing, and it'll actually arc, the red number would arc down. When we come to the NASDAQ, same story, identical story. Number one, the market has finally moved back to these key moving averages. Number two, we have the upper Bollinger Band, and it has done a job of capping prices. Doesn't mean you can't get away from it and hit it again, but it's capped them from running away. We just saw the first test of the 100-day and the 18-day, and we had a bullish crossover in this market. So the bullish crossover, we can show you right through here. This is the red line under, and this was on Friday. Yesterday, you saw the 18-day average get over the 100, and you're making a run for these highs. I see it, and I recognize it. If you take out 85.56 and don't take out 91.44.75, you will end up with lower highs, lower lows. Admittedly, even if the pros want to sell there, the risk is all the way back up today's high. That's one heck of a risk. It's one thing to talk chart patterns, it's another to take it on. So the easiest thing for the bulls is to support this market on pullbacks here as new buys and not letting the market get under that 85.56. That's the game. But if you take out that number, I get bearish. Dow, take out this number right here, 22, what was yesterday's low exactly? 23.208. That creates the same problem. Right now you've got the higher lows, higher highs. But this market could end up coming back here. Something else has happened on this chart that's different than the others too. Here, you're not quite in a pipe. You got a channel that you're trading within. And when I want to come back the other way so you can see it. The Dow is different. It's getting narrow in this channel. That's when you start entering this pattern of whipsaws. I'm noticing another thing in the market. Window envelopes. The way that they create, they rarely go to numbers when you're doing your numbers on them on the initial setup of a number 4. Now, if you don't know window envelopes, I'm not going to explain it. I don't show it here. But that's the norm. They went out to 20s, 40s on this crazy action that we had all here for the first numbers. To almost the market with the exception of the energies, those numbers are crashing in. And that tells me this market, something is changed in the marketplace, and I recognize it. In the Russell, the pattern is still higher lows, higher highs, the same pattern though. Momentum pointing down. You take out this 1220, Katie bar to the downside. You might be going back to those lower numbers. But more important, I think that the bears that have been in the wings might be saying, aha, we're through that rally. That's my point. And I am not a bear. Please don't label me. I'm a chartist. In the VIX cash, the trend is down, which still to the upside for stocks. Lower highs, we've had lower lows. If you were to take out 35.30, that would change the pattern. It would turn bullish over the 18-day average. If the market falls further, as I said yesterday, I'll say it again. I would not be surprised you fall again if my theory is right, that we're back to a new normal trading range. Put writers will show up at that number looking for the market to bounce back to the 18-day average. Let's see if the theory works. It worked here, and that was the first hit on a lower Bollinger Band since all the way back in here, and I had been waiting for that. If you get my newsletter, I'd been talking about that. Now here is what you call that classic pipe. Today, a new sell signal showed up in the bonds. Lower highs, lower lows, under the 18-day average, momentum to the downside. So as long as yesterday's high in this market isn't taken out, let's see if I can get this to do it, which was 181.26. I look for this market overall to try to work lower towards right here, with that as the stop. What else do I say when you get into these narrow pipes? Churning time. So I never trust new positions being put on when they narrow in that much, but that's just me. Same thing on the 10-year notes. You throw out new sell signals today. Momentum down, bias down, lower highs, lower lows, but warning sign. This area here, you rarely get a lot of follow through one way or the other. Dollar index. You had one shot to cover shorts at the lower Bollinger Band. It held it right here. Started back up, and now you're back to that line in the sand, totally neutral, because this rally took out this high. So you've got a pattern of a lower low, higher high. That's not a trend. Eurocurrency, we had a piece of real bad news come out. It depends how you want to look at it, but I think confusing news is maybe the best word, where the High Court in Germany is put to task the European Central Bank to explain its actions with what it did on a stimulus measure. It doesn't match to the wording of German law. I will let the scholars deal with it, but you know the Eurocurrency got hit on this 55 points today, so the market is concerned about it. Is it a one-day event? I don't know. The courts have given the European Central Bank 90 days to answer questions, and then if they don't, what happens? Again, I'm not a legal scholar. In the Japanese yen, back up, and this is what I'm saying is in the bonds and notes. Does it follow through from here, or does it run out of momentum? The odds favor it's going to run out of momentum. It's overbought into the upper Bollinger Band, and it's taken about a week to get up there. Bitcoin, still very bullish, still very much with a embedded reading. Now, you know what I'm going to tell you. If you lose this reading, then you got to come out and you're saying, okay, we'll get another correction. But the event is underway where a week from today, the halving takes place, and I started mentioning that to you back here. And I said, be careful, this market's going to have an underlying bullish theme, and it turned out to be accurate in what the market has done. Doesn't mean that you buy it, sell it, and doesn't mean you trade Bitcoins, but when you're going to have less of them for the same effort, things change. In crude versus WTI, and I'm talking obviously Brent versus WTI. Maybe I should put Brent up there so you understand that better. Higher lows, higher highs. Still an uptrend. Get under this on a settlement, we could be looking at a retest of 345. You haven't done it yet, so it still favors Brent is staying stronger than the U.S. And Brent went into an uptrend today. Higher lows, higher highs. Momentum has been leading this parade. You tell me when that momentum turned up, and watch the momentum, watch price. Momentum's leading price. Can the market make it to 36? I don't know. I know that if it takes out 25.48, this pattern is broken. That's all I can say. Same on WTI. WTI, though, was even a cooler pattern because you had an embedded reading. Both numbers, in fact, all these numbers had been under 20. You lost them. I recognized it, and I said, I think we're going to go on my morning subscriber video. We're going back to at least the 18-day average. You did the work today. Now, it turned into an uptrend. So until you get back under 2084, the pattern's higher lows, higher highs. We'll see what it does. This is an attempt at a breakout on RBOB. I know I've been crystal clear here saying, folks, there's more cars on the street. We're sitting at historic lows for a very long time. You know, the price is normally almost double that at this time of the year. So pay attention. This could be a very big base. I'm not saying it's yet confirmed it, but it is certainly in the first stage of confirming that. And in nat gas, for the same reason that we've been talking about all these wells being lost in the shale country, I said you're going to have less nat gas. It's just hand in hand. And you're getting into spring where it's eventually going to get summertime weather and spring weather. We're not there in Chicago, by the way. Tonight they got to put out blankets on the shrubs. We could get a frost in the suburbs. So we're not quite there here, but many parts of the country are. It's beautiful in many areas. And you got up to the Bollinger Band, you know what I'm going to say. That's where I think the pros took some money off. The support's back here, but it is an overbought market at this point. You know, we talk together about this, and I offer so much information in my futures trading kit. Number one, the charting software. If you want a trial to it, all the downloads are right in there. You let us know, and we'll set you up. Number two, via this, you're going to get all the brochures that we have, be it the Arun indicators, pivot point, cause and effect. What about the chart patterns? So I've listed out all the major chart patterns, show them to you. This wasn't put together 1, 2, 3. We link into the Chicago Mercantile Exchange for all their educational brochures, and by doing it the way we do, they're always up to date. Second thing, what about quizzes if you're into that? Learning the different parts from the CME group about that. And of course, all the news about my charting course and so on, everything's there for you to person. See if you like it. How do you get it? It's really simple. Go to our website. You'll see our free offers. Hit that. You can call my staff. They'll work with you. And last but not least, you can click up here if you're watching me on YouTube. It'll take you right there. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.